If you keep entering trades and getting stopped out before price makes the real move, this video is for you. Today I am going to explain why traders enter into markets early and how inducement is the main reason behind it. This breakdown will help you stay patient and enter trades with more clarity. One of the biggest problem traders face is impatience. You see price approaching a level, structure looks good and enter immediately, only for price to move against you first. Most traders think the market is against them, but in reality, they entered before inducement was complete. This is where most losses come from, not bad strategy but bad timing. So, also, inducement. Let me tell you what inducement really is. Inducement is a deliberate move by the market to attract traders into the wrong position before the real direction begins. Smart money needs liquidity. So before price continue, it often moves in a way that triggers early entries, hits stop losses, sweep liquidity. That is not random. It is inducement. If you don't understand this, you will keep entering the worst you will keep entering at the worst possible time. So guys, I am going to explain the meaning of inducement to you on this chart and how to not fall for these inducement traps in the chart. So guys, if you can see this market, let's start from somewhere here. You can see this market has been bullish, right? And you also know gold has been bullish. So let's start from this structure where this market broke this high. Let's start from this one. So once market broke this high now, this past high, the market break the high and did what? Keep pushing, then came back here to start buying. So after market came back, then shifted to break this key level again and give us a high, our lower high, our higher low. Then the next move is higher high. Next one, higher low. Then the market give us a higher high. Then you can see this place now. After the market gave us this higher high, then the market changed structure and started moving down. You see, in everything I just marked out for you, you see from this side to this side, they are all inducement. All the structure in this range are all inducement. So if you don't know how to trade, you will keep falling for these structures. Before the old structure begin, you will be out of the market. And where traders make mistake is that they don't wait for the real move to begin. They enter too early. They are impatient because of small move from the market. They tend to enter the market. Okay, let me just take a buy, let me just take a sell, let me just be inside this trade. And this is how they lose all their money in forex trading. And they will keep feeling like the market is against them. The market is not against you, like I said. You are just doing the wrong thing and you are entering from the inducement level. That's why, and people like this, they are the one calling forex a scam. If you take note, because they are the one that are not patient enough to understand what inducement is, when to enter a trade, when to stay out of a trade, when to look for your setup, when to not look for your setup. If the market is somewhere here now, let's say the market is somewhere here, we can see some people analyzing this market at this current situation, like they are going to try to force an entry from this point. So if you are forcing an entry from this point, then you don't know what you are doing, because you don't know where the market is coming from and where the market is heading to. But if you can understand that after the market break this structure right here, after the market break this structure right here, then came back here before start buying. So, and if you see this buy now let's use our trend line. I want to show you something with this trend line. If you take note of our trend line, if you can see, after the market created this trend line, after this two touch, then the market push up and did what? Touch again, but it was unable to keep buying. Then the market break below this trend line and did what? Pull back to this zone, then started selling. So traders are going to use some traders are going to use this other block to buy. Some are going to use this other block to buy. Stuffs like that. They will look for many different zones from this market to buy from. So they don't understand where the real move is. They don't understand when to enter. They don't understand when to stay off. But me, if I see something like this, if I see something like this, and I see that okay, this market is now bearish and this market is coming down, you can see how I marked out this trend line. I can just think this thing, you can just say, okay, this is your trend line liquidity, and you are expecting the market to sweep this trend line liquidity before you look for anything. So if you understand that one now you can even say, where is my order block? Where is my order block? So you can know where your point of interest is and where you expect reversal from. So if this is your order block now and you mark this one out, you can see the difference between, let me show you an example. You can see the difference between this structure and this structure. Now, this is a breaker block right here. This is another block, right? We have this touch on this breaker block, then the market moves up and did what? Gave us. Can you see can you see clear structure at this point? You cannot see a clear structure at this point. But when market mitigates this order block right here, the market sweep this liquidity and mitigate the order block. Then look at what the market did. It's pushed up immediately. Then after this push up, we have a break here, we have a break here, we have an inducement protecting this breaker block, then an entry from here. But you see this trade, I am going to show you how I enter this trade. So before then, I want you to understand that if you want to know inducement very well, you need to understand where the market is coming from, where the main structure is. You need to understand where the main structure is. So if you don't understand where the main structure is, you will keep falling for this inducement. If you take note of this trade, you can see I don't have any sell setup from this place. It is not that I can't see my sell setup, right? But I choose not to just enter the sell because I understand the market is bullish, and I mark out my key levels where I expect the market to get to before buying. So guys, you need to understand that, and you need to understand, like I said, you need to understand where the market is coming from and where the market is heading to. In a situation like this, let me show you this thing. In a situation like this, if you understand, since this market has rejected from this other block, right, then the market has started pushing up. The market has started pushing up, giving us higher high, higher low. Then the next move should be higher high. And where is your overall target? This is your overall target, because that is where you should expect the market to break. This is your number one draw on liquidity. After this one, this is your next target, because the moment this market break this high now, you can keep buying. You can keep buying till the market break this high, because we expect the market to break that high. So let me show you something, and where traders also make mistake. Let me show you another one where traders make mistake. You can see after the market was giving us lows, highs, then the market shifted structure down, then gave us our inducement, then the market started pushing down. You see, where most traders fall for this trap is that you need to understand, did the market hit a point of reversal before giving you this pattern? If the market did not hit a point of reversal before giving you this pattern, then why taking this pattern very serious? Like, why taking it very serious? Let's look at this praise now, where the market started rejecting from. So is this a point of reversal? You should judge this thing yourself. I always say this thing on my live section: tackle higher time frame with higher time frame, tackle lower time frame with lower time frame. Since you are tackling this market with 4 hour time frame now, you are expecting buys but not sell. You see, if you have entered a trade like this using this one now as your market structure shift, this one as your market structure shift, this one as your inducement, let's just leave it that way, and this one as your, like, let's just call it your point of interest, which is your order block. Now if you enter a trade like this, if you take note, you are going to lose this trade. And why? Because you are entering in the wrong position. You are not waiting for the real move. You are not understanding what the market is doing. So stop trading against the trend. Always follow the trend. Always try to understand what the trend is saying. Always try to understand it. That is going to help you. So in a trade like this, let me show you how I was able to get this continuation. After the market has rejected from this other block, right? Then the market has given us this break here. This break here. You can see our market structure shift is not really clear, right? But I am going to leave this market structure. Why? Because since it has rejected from here, then I believe it has completed this structure. This break at this point, then this pullback, then the next entry is our point of interest. So I won't pay attention to market structure shift at this point again. Now let's scale down to 15 minutes. On 15 minutes, after this structure has been completed, it was more clear on 30 minutes. So then this market break this high, high here, and this market break this high. So after the market break both highs now, I always tell you, the moment this market close, now where is your inducement? If you are even going to use this high and this high, can you see any inducement at this point? No, you can't. You can't. So what do? You have to go lower. You have to like understand what is happening from this point. From this point, you need to understand, okay, before the market even push above, what happened at that place? What happened? Now let's go down to the 5 minute time frame. You will see this thing will be very clear to you. It will be very clear to you. Now, after the market has mitigated this 30 minutes breaker block, right? Then the market did was started pushing up. Then it gave us a structure shift here. Now, why will I count this as my structure shift? Let me show you something. The market gave us lows, high. Then the market did what next? Give us lower low. Then what is next? Lower high. Then lower low again, lower high. Then the market created a lower low. What are we expecting next? The market should give us a lower high to keep selling, right? But the market was unable to keep selling. The market gave us what? High, then low. Then the market give us higher high. So since you confirm the market has given you higher high, so what are you expecting next? Now this will be your market structure shift. Now, where is your inducement? This pullback after this pullback right here, after this break, will be your inducement. Now, where is your entry? Where is your entry? This is your entry at this point. This is your point of interest. This breaker block right here is your point of interest, because the moment this market closed above, this inducement did not mitigate this breaker block. So this breaker block is valid to use. So if you are buying from here, where is your nearest drawn liquidity? I need to explain this thing, break it down for everyone to understand. Where is your nearest drawn liquidity? Number one, this is your nearest drawn liquidity, one. But since me, I understand that this market is going to break this high, and I understand how gold moves. This is another drawn liquidity, and your overall drawn liquidity. This is after this break now. This is your overall drawn liquidity. This rectangle line is somewhere here, because that is where you are expecting the market to break. You can see when the market was coming here, I was not looking for sales. I was only looking for buys from this point. I was only looking for buys. From this point now, I was just trying to look for buys because I understand the market. So guys, that is my explanation on how not to get trapped in inducement and how to understand how inducement works. So if you want more videos like this, just subscribe to my channel, follow me on X, join my Telegram channel, and stay with me. Thank you guys, and have a nice day. And my name is Timmy. I forgot to introduce myself. My name is Timmy. You can call me Timmy Forex. Welcome to my channel. Thank you.